Hey, my name's Tony Britton. I'm with my good friend Bruce Dodd with Chattanooga Mortgage. I'm with Berkshire Hathaway, the Edrington team, and we just want to talk a little bit about why you should invest in real estate. I often get the question asked, how's the market? Well, it depends. Are you going to buy? Are you going to sell? Are you going to invest? But particularly, let's talk about a little bit about that return on investment. What do you think about that?
Sure. Well, if you think about it, houses are going to go up in value. If you look at over the last 20 years, if you looked at the year 2000 to 2020, let's forget about the last couple of years.
Okay.
Because they skyrocketed. But over those years, houses in Chattanooga went up by about 4% each year. Well, when you buy a house and you're getting a mortgage, you're only investing your down payment.
Mm-hmm.
So let's say, for example, you make a 20% down payment, and that property goes up 4% a year. So basically, in a couple of years, you're at a 50% return on your money. So more wealth has been created by real estate than any other class of asset in the United States. And it's because typically we see real estate go up in value, and you're not having to buy the whole thing. It's not like you can go get a mortgage and buy 95% of it, or get somebody to lend you 95% to buy a stock.
Yeah. I get that just from personal experience. I bought our first house. I mean, this was before the real housing recession. We got to get into that, but I took out an FHA loan. At the time, it was 0% then. I know it's like 3.5 now, but we didn't put that much money down. But over time, that house grew in value, and as we're paying down on our mortgage, that gap is what we call equity. It grew and grew and grew. And so by the time we wanted to get to our next home, we just used that cash, put it to a bigger home, and had some money left over. And if we had never done that, we just wouldn't know. A lot of people just don't know.
Yeah, but you think about this. If when you're buying your first house, if we look at a 20-year track record, that says that if houses are going to go up, let's say around 4%,
Mm-hmm.
then if we bought a $250,000 house, that means it's going to go up $10,000 a year in value. 4% of $250,000.
Yep.
If you live in that house for 5 years, that means that house has increased by $50,000. $50,000. So what that says is, to me, a big part of the reason to buy your first house is to get your down payment to buy the house you really want on down the road.
Yeah, that's good stuff, man. We were talking about return on investment. That's a great example of how you can get your return on investment. Why should people buy now instead of maybe renting? Because we get that question a lot as well. Should they wait? Should they go now, invest now? And so, what are some of the things you've seen and how we?
Well, let's talk about that a little bit. All right. So, for most folks, if you're going to be in an area for for a defined period of time, you're going to be here a little while. Well, when you're renting, you get no economic benefit. You just get a place to stay. When you buy a house, you get to participate in that appreciation. And so let's say that you buy that house, we talked about that return on investment. Well, it also goes the other way. So if you're waiting to buy a house, a $300,000 house today, if we looked at the last 20 years before the last couple, and those 20 years did have the big housing recession in it, houses went up by about 4%. So that says a house that's $300,000 today is going to be $312 this time next year. It could be $325 2 years down the road. And so a lot of folks are saying, well, hey, I think values are going to come down.
Mm-hmm.
Well, right now we only have about 2 months worth of inventory.
Yeah.
The last time we saw values come down in Chattanooga, we had about 12 and a half months of inventory. And then they only came down a little bit. So things we'd have to get like 6 times the inventory we have right now.
Yeah, just to put in perspective, because when we're spouting out numbers of inventory, just around 2008 to 2010, just in our area, we had about 15,000 houses on the market. And so fast forward, there's under 2,000 houses on the market now. So it's still a seller's market, but now we're able to see buyers have a little bit more negotiating room, whereas the first quarter of this year, everybody's clamoring, trying to get a house. People are getting left out. Now they're the people that are saying, "Oh, I'm just gonna wait until the winter time." Well, interest rates did double. However, how can we combat some of those things in terms of different things we can be creative and come up with ways?
Well, first of all, I think what's important is that before you get too caught up in interest rates, let's make sure somebody's looking at what is this going to cost me each month, and am I comfortable with that today? And if you're comfortable with that today, the thought process is, hey, we'll see rates come down at some point in time in the future, and we could refinance at that point. But if I can take the payment now, then I'm buying a house right now before it's just going to continue to go up in value. And I can get both the benefit of paying a loan down, I can get the benefit of that house price going up, and I can lock in at today's house prices. So that's number one. For folks who want to try to look at lowering things right now, there are some creative things you can do. There's something called a 2-1 buy down. So what that would say is if rates are at 7.25% today, you can get your first year interest rate at 5.25%, your second year interest rate at 6.25%, and then it would go to 7.25%. And so then the thought process, if rates come down, I can refinance it during that time. Now it gets that's a little complex, and folks can ask you the details. But that's the thing where we try to get the seller to pay those costs for it.
So guys, deals are getting done. Don't try to time the market. Don't try to time the market. When you can afford to pay your mortgage, if you're a monthly payment person like most people are, get the house. Get the house, start building equity today, and start building wealth through real estate. My name is Tony Britton again, and this is Bruce Dodd with Chat Mortgage. We look forward to talking with you.